I originally thought Bitcoin would end the year at 50 or 60,000. Things are happening so much faster than I had predicted.
People see it less as a security risk.
Major banks, they're climbing on board cryptocurrencies.
Hello, I'm Olga Karif. I cover crypto. That's been in the news a lot, especially last year when the price of Bitcoin quadrupled, and also earlier this year when Bitcoin hit new highs. So what exactly is Bitcoin and where does it come from? I think the best way to think about Bitcoin is that it's digital money. It's essentially software. So back in 2008, a person or persons named Satoshi Nakamoto released a white paper essentially explaining this idea. And then the following year, this network that on which Bitcoin runs made its debut, and very quickly Bitcoin got just an awful lot of followers among first programmers and libertarians, and then among just regular investors, and more recently, institutional investors as well. So the way Bitcoin works, and this is the most appealing part of it, is that you don't need an intermediary like a bank to participate in this process. It's all done via software and via computers called miners. Anybody who has a high-powered computer can potentially be a miner on the Bitcoin network. And what miners do is they essentially verify transactions. They function as a bank would in the traditional payment system. They verify transactions and then they double-check each other's work and record the transactions in a digital ledger that keeps all Bitcoin transactions. And so anybody can be a miner. Of course, a lot of companies are now miners. It's a little harder for individual people to compete with these companies that are doing mining right now. So initially what attracted techies and libertarians to this idea was that Bitcoin is not controlled by any specific government or any particular company, so it's off the people, if you will. More recently, we've been in this environment of zero or negative yields. And so some companies and some money managers have been trying to find a way to sort of essentially make higher returns. And Bitcoin has emerged as one way to do it. Of course, it's very risky, but it's definitely one way to do it. So last year, a company called MicroStrategy invested part of it, corporate treasury, into Bitcoin, and other companies and money managers are following suit. Of course, critics have a lot to say about Bitcoin as well. I would say the biggest issue with Bitcoin is that it's a very liquid market. So less than 2% of addresses, which you can think of as wallets, less than 2% of addresses control 95% of Bitcoin supply. So it's basically, it's a game in which there are just a few very large players, and when they sell or when they buy, they can really affect the coin's price. But there are also, other things that people worry about. One of those is the environmental impact of all this Bitcoin mining. So to power this machines, you need a lot of power. Miners that verify Bitcoin transactions, they are moving all around the world in search of cheap electricity. Other issues that people worry about is illegal transactions. Some criminals have used Bitcoin for money laundering in the past. And of course, one big one for individual investors is the coin's very high volatility. So it's definitely not for the faint of heart. So is it digital gold or another bubble? And I think that question is wide open right now because, the last time when Bitcoin had a big rally, this was in 2017, that followed in 2018 by an 80% drop. So it's a highly volatile asset. Of course, as more large money managers, as more corporations enter it, it's maybe becoming a little bit more stable, but that's very questionable. And I think we need to wait and see whether this is really digital gold or something that can hold value, or if it's another bubble.